Yeah.
So based on the repayment behavior,
Based on the
uh,
repayment behavior.
timely repayment, if they made the payments before the due date.
Yeah. Whether have they made the payment before the due date or at least on the due date, no, rather than the delays. Okay. So how do we find all these things?
We get data from credit reporting bureaus.
Credit reporting bureau. So in
Credit
India, we have,
scores.
in India, which is the credit reporting bureau?
CIBIL and
Huh?
CRISIL.
CIBIL,
CRISIL,
CRISIL.
CRISIL.
Not CRISIL.
CRISIL
CIBIL.
and CIBIL.
CIBIL. CIBIL. For individual, it is CIBIL. Okay. In Australia?
So Experian.
Okay. If you read my notes, if you read my notes, you will come to know. Okay.
Elion.
Yeah, correct. So we have all this.
Ilion.
Correct. So all these agencies, they provide the credit history. So earlier they used to get introduction in India. No, if you want to have a loan, I mean somebody in the village or somebody in the place, they should go and give a recommendation. Then the bank manager will approve it. But nowadays, no recommendation will work because you have the credit history. So what if somebody doesn't have a credit history? That's where other variables the bank will try to use rather than this one. So it's not just the character about his repayment character. I mean, I should also check how he is spending. What is the spending character? So in Australia, they have, I mean, India also the banks might be using it, but Australia, they have a household expense benchmark they have. So if you are a family of, like say, husband, wife, and one child, and then you are a middle income person, so what is the average expenses which average expense of people which of your same middle income level, how much they spend and how you are spending. So that's a benchmark average. So if you're spending above the average, it means your spending is more. Okay. And if somebody who's spending less than that, I mean, he's very conscious about money. Okay. So all these character things, they try to assess. So I was giving an example for the HDFC Bank 10 seconds loan, which they introduced. One of the variable which they have used to assess the person's character is in which ring you pick your phone call. So when a phone rings, whether you have the habit of attending the phone call or you are never reachable or you attend it late, so that is one of the parameters they have kept. So if somebody is picking the phone by the third ring, when he's very prompt in attending the phone call, definitely he would be prompt in repaying the loans. That's one of the variable which was used. But earlier I have seen people using variables like if a person who's very prompt in paying income tax and he's assumed that he will be prompt in repaying the loan as well. So like that, those were, I mean, if people are doing business, they will even go and talk to your suppliers to whom we have to make the payment. So suppliers, if they give products on credit, 30-day credit or 50-day credit, 60-day credit, 90-day credit. So they even bankers used to talk to the suppliers and try to find out whether how prompt business was in fulfilling the credit terms. So if they are prompt, I mean, bank will be so comfortable to give the loan. So character is not just the credit CIBIL, this one. They look at various other parameters also, just to give you a perspective. Now, all these things, variables, what they use will vary from one bank to another bank, but the concept remains the same, that you have to check the character of the person. But how many dimensions, how many variables you are going to assess, that may vary from loan to loan, also from bank to bank. Okay, so that's one. What is the last one? Did we cover all the C's?
Collateral.
Collateral. So collateral doesn't apply to personal loan because
Secured loan.
so which are the two? There's one question. No, they asked which are the two C's which doesn't apply to unsecured loan.
Capital
and
and collateral.
Capital, exactly. Capital and collateral is irrelevant. They don't. There's no point in looking at that. Okay, it's not applicable. So these are the things to keep in mind. So the questions what you can expect is not straightforward. What is what? You may get it such a easy question, but then situations they may give, and if you are a credit manager, will you approve or will you reject? Under what? So that is a question, but then you need to answer in such a way that what are the dimensions you think and how depth you think, and your answer should see. I would know, like Samrud I know, Dennis I know, Jessin I know, Rohit I know, Minna I know. I may have a like biased thing like, okay, they may be good or this one, but then company doesn't know. The answer which you are going to give, based on that, they decide how critically you are thinking and how well you are communicating. So that's why we don't understand this. That's why many of us, we are not clear in the interview. It's not about the right answer, it's about how you give the answer. Okay, so don't just give I will fund or I will not fund, but then give a justification. So I would fund, but then under certain circumstances, number one, number two, number three. That shows that how systematic, how organized you are in your thought process. Sir, I would reject this loan. Why? Because three reasons. Number one, number two, number three. That shows, very professional way of communicating. So like that, I want you guys to communicate to crack this interview. Now, quickly, I mean, I don't know whether you all have gone through the notes or not. My notes carries a lot of stuff. Yeah, my video is still getting uploaded. Are you able to see my screen?
Yes, sir.
Yeah, and some theory background I've given you just for your understanding. Because in India, we know that CIBIL is there, banking means RBI is there, all these things we know. But then in Australian perspective, what are the different regulators which are there? I've given you some perspective here. You can go through it. Worth reading. Knowledge is always power. And then where the critical things that start is, if you come down, I do not know whether you guys scroll down because the top may look irrelevant. Oh, here is the important thing, the responsible lending practices. Okay, so in Indian perspective, I told so many things, but Australian perspective, we are supposed to do key elements. Obligation to make reasonable inquiries. You as a lender, ANZ Bank, you need to ensure that you do sufficient due diligence to understand the requirements of the customer, and then you give the right loan amount so that you don't missell. That's one thing. Second thing is you don't fund a wrong customer. Third thing is you don't fund a customer with extraordinary amount so that he is going to default. Okay, so that as a lenders is more responsible while giving the loan. In India, why we have more NPAs? The lenders were not responsible, and mostly these NPAs are with government PSU banks because they had irresponsible lending practices that led to NPA, higher NPA. Okay, so that is very important. Responsible inquiries. Okay, responsible behavior of the lenders. That's very important. So Australia gives a lot of stress on you guys, potential ANZ employees. Okay, so understanding the borrower situation, lenders must make reasonable inquiries about the borrower's financial situation, including their income and employment status. Why I'm taking this and in the reading, this is each and every section here is going to be very important. Okay, so it means like in India, I mean, we have full-time employer, part-time employee. Same way, they also have all these things. So for a full-time employee, how do you assess the income? For a part-timer, how do you assess the income? What are the different forms and different variants of income they have? We are supposed to know. Okay, so these things may come in the question in your MCQ assessment. They said it may come even in the interviews. They may give a situation where a person is a part-time employee and who has got this much of weekly income, and he's asking for this much of loan. Would you fund? So like that, they may give situation. So if you don't know what are the different types of employment available, I mean, the answer to what you're going to give is going to be insufficient, or it might be sounding illogical. Okay, so employment status, living expenses, existing financial obligations. So in India also we have all we consider, but I'm just telling you. Okay, assessment of borrower's need. They must also understand the purpose of loan, for what purpose they are taking. In India also we do that. We try to understand. Accordingly, we give the loan. If somebody is asking for a loan, the first question I as a banker used to ask is, sir, for what purpose? Whether you're going to buy a machinery or whether you want loan to buy raw material. Okay, raw materials means I should give working capital. Machinery means I should give capital loans like a term loan. Okay, so accordingly we need to give. And for certain things, specific loans are there. Tractor loans. That in a separate loan is there for tractors. Comes under agri. Okay, so these kind of products in India we have. Okay, fine. Now, verification of financial information, income and expense verification. Whose obligation? The lender's obligation. So lender must verify the information provided by borrower is accurate. This often includes obtaining pay slips, bank statement, tax returns, or other documentation. Can somebody provide inaccurate income details? Can somebody provide inaccurate income details?
Yes, sir.
How?
So I feel like they can prepare a payslip on a company that is not
That is
legitimate.
willful. That is willful fraud, right?
Yes.
Can they give a accidental wrong information? I'm not talking about the clerical missource, like I missed one zero or added 1 0. Okay, so we need to understand what are the different components of income in Australia. The pay slip, what are things? There are overtime. If you work overtime in Australia, they get extra money. Now, will that be a stable income? So what the
No.
person would have done, the chances are he would have taken his base income plus he would have added his overtime income and he would have inflated his total income and showed to you as in this one. So as a banker, you need to understand what are the different components of income on a pay slip. Which things I can comfortably take and give, consider as a stable income. Which are the items which will not be a stable income because overtime this month I would have done extra. Okay, next time I may not do overtime. So my income will come down. If my income comes down, what is the big problem for you? I mean, the problem is the borrower will get stressed out financially because now he did not make overtime. So what will happen is income will come down. So as I told you, a person will not skip his meals. A person will not allow his child to go starving or wife to go dissatisfied. But then he will not give up on his home. He will not give up on his parents' old age home, expenses or any medical expenses. He will give up on loan repayment. That is the problem. Okay, so we need to understand which component of income is stable, which component of the payslip is unstable, which you should include or you should not include. Okay, so all these things we're going to see. Credit history check that we discussed in previously also. So these are the agencies: Equifax, Experian, Elion. This one. Okay, then assessment of borrower's capacity to repay. See, affordability assessment. Banks and lenders may assess whether the borrower can afford to repay the loan without experiencing financial hardship. This involves calculating uncommitted monthly income. That's what I told you. In India, we don't call it as uncommitted monthly income. We may call it as disposable income. They are calling it as uncommitted monthly income, UMI. Nothing but you need to exclude the existing EMI commitments. You need to exclude the existing regular monthly expenses like school van fees. Every month I'm paying say 3,000 rupees. Every month it's going to come. Every month I'm paying electricity bill of say 1,000 rupees. It's going to come. Okay, so all these things we need to include and find out the uncommitted monthly income, and then debt to income ratio, which they use. Existing debt, how much I have, existing income I have. So what is the ratio? How much is the percentage? So based on this, they make the decision. So you as a lender, you should know how to calculate UMI, how to calculate debt to income ratio. Other college students will try to calculate only these two things and come. But you, Christianity students, after going through my lecture, should also know how to interpret these things and under which circumstances you will make a credit positive decision to approve the loan, or under which situation you will reject the loan. Until then, you should know, you should be a decision maker. Serviceability testing. Lenders often use serviceability buffer when assessing loan applications, particularly for home loans. Okay, that's not applicable. And then suitability of the loan product. Appropriate loan products. Lender must ensure the loan product is suitable for the borrower specific. Okay. Loan purpose we discussed. Clear, transparent information, terms and conditions we are supposed to communicate. So in the email writing round, or whether it's a telephone, this one, they may give a situation, ask you to speak, or they may ask you to write an email. They may give you where a particular terms and condition not clear for the customer and he's upset. And then how will you respond to that? They may ask. Then ensuring loans are not suitable. Okay. Loan rejection. If a lender determines that a loan is unsuitable based on their assessment, they are required to decline the application. So if you're going to decline a loan application, how do you communicate politely? You should not, you should not hurt the customer. You should tell him like on what basis, why you have declined. So that, next time he should come to you, right? He's a customer. He may require loans again and again. So if you talk rudely to him and then, you lose a customer. And for ANZ, it's customer in Australia. That's why they may ask you to speak and try to understand your character, your attitude. Okay, how you will face a customer who's upset, who's irritated. All these things are important. Ongoing reviewing of credit products, banks, expected regular review. Okay, these are fine. financial hardship consideration. So assisting borrowers in financial difficulty. So this is very important. Responsible lending extends to assisting borrowers who may experience financial hardship. Lenders are required to have processes in place to offer support, such as restructuring of loan that I explained to you, providing temporary relief for developing repayment plans, which would suit somebody who's going through, so suddenly they lose their job. Okay, but they have a good degree, they have a good academic track record. I mean, for 3 months he may be jobless, but then he will get a job. Okay, so how no? So such helping hand is provided in Australia. So it doesn't mean that he is done means you're just going to throw him out. Okay, so try to find out. He say for example in India, MBBS doctor. I mean, he lost the job. I mean, obviously he will put up a clinic and somehow he will get his money. Okay, so you need to try to find out, okay, what is his qualification? What is his experience? Okay, whether it's a job market, this skill is hard job or a outdated skill. If it is a hard skill which is in the market, definitely he's going to get his job back. Okay, responsible. Okay, fine. All these things are done. You can read. Now sources you can read. Sources very important in the sense credit information from Equifax, Experian, Illion. Income verification documents through payslips, tax returns, bank statements. Okay, bank statement, no, very, very important. You can understand how he's spending through his bank statement. I mean, how much they are spending in rent, because all the payments goes through the bank. How much they spend in electricity bill. So you can try to find out what is their average expenses. Accordingly, you can decide. So in terms of when I say over a time is there, bonus is there, incentives are there, which are all not stable. 1 month they may get more bonus or more incentive, and next month they may not get. Okay, so what they do is they take 6 months or 12 months of your payslip or bank statement, try to find out how much you have got in terms of, apart from your base income, how much extra you have got. They'll take an average value and then they'll try to fix, the income, bonus, all these components, maybe 20% of your base income. So you have got 1 lakh rupees, but every month you are getting, say, on an average, 20,000 of income overtime or incentive or something like that. So in Australia, they include, instead of considering 1 lakh as your income, they would consider 1.2 as an income, so that your debt to income or the uncommitted income will be a little bit more, so that you can fund the customer. Okay, they consider that in Australia. So these are the documents where you can look at it. Also the income stability, consistency, living expense verification. So they calculate household expenditure measure to estimate reasonable living expenses, which I told you from bank statements we can find out. Employment verification, employer count, whether he's telling he's working. So we may get their employee ID card, salary slip. Salary slip is one evidence that they are working still there. If they're already existing customer, obviously bank data, public databases like not CIBIL, court judgments and something where they are declared bankrupts. All these, this also they use it. So here are the examples. See, look at this personal loan assessment. Yeah, borrower applies for a $15,000 unsecured personal. The bank requests income payslip, reviews their credit report, calculates DTA and UMI. The bank finds the borrower has got a DTA of 35% and a positive UMI, indicating that they can manage the loan repayment without financial strain. The loan is approved with clear terms and conditions. Okay, so means the DTI and UMI are going to be a key criteria based on which you are going to make this one rejection. A DTA of 50%. The bank decides that, it will be a financial strain for the borrower, they decline it. So how lenders in Australia calculate financial obligations? So borrower's disclosure. So they ask the borrower, do you have existing debts, regular payments, lease, rent, how much you are paying, all these things. Credit reports we take, bank statements I told you, you can find out how much is paid for school rent, fees, rental, any EMI is debiting from the bank statement. All these expenses you can find out. Supporting documents, loan statements for existing loans, wherein you can find out whether the existing loans, whether it is served promptly, whether on payment they are doing the existing loans. So you can find out. Then child support documentation for school fees and other things, lease, rent agreement, living expense household, the benchmark for that locality. Say, for example, you are in Sydney. So Sydney may have a higher cost of living. Another location may have lesser cost of this one. So the household expenditure may come down. Benchmark. Okay. So accordingly, they'll try to see serviceability calculation. This is very, very important. Debt serviceability assessment. Whether if I give loan to a customer, whether he'll be able to service my loan. Service my loan means whether he'll be able to pay the loan or not. So that is his ability to pay, which is debt to income ratio. Second thing is loan to value ratio. These two things they do. Also the uncommitted monthly income. So how UMI is calculated? They are given a example. UMI is equal to net monthly income. So you need to understand what is gross monthly income, what is net monthly income. So net monthly income minus living expense plus existing loan repayment. Can anyone tell what's the difference between gross monthly income and net monthly income?
Sir, the gross monthly income is income before taxes and other expenses are deducted.
Very good. Exactly. So from the gross, tax is already exempted. So that's only net. So again, we need not subtract tax obligations. So what they're subtracting only living expense, existing loan payment, other financials. So in the problem which they give, if tax is given, I mean, the net income may not be given. They would have given gross income. So if they're given gross income, then accordingly you should calculate. Okay. So the net income minus this one is the formula. And then other things, living expense, existing loan payment, financial obligations, all these things are considered. UMI, loan affordability, risk assessment, stress testing. So all these things you go through, important things. Debt to income ratio formula, total monthly debt payment divided by gross monthly income. So for DTA, they take the gross monthly income. So total monthly debt, already existing loan if you have. Suppose I don't have any existing loan, I mean, then my DTA is good. But if I have, say, for example, my monthly income is 1 lakh rupees, my existing debt is 10,000 rupees. I mean, the loan payments that I have is 10,000 rupees EMI. So it means 10,000 divided by 1 lakh, which is 10 per 4 by 10 per 5 means by 10. So my DTA will be 10%. So 10% is very low. Lower DTA means it's good. Okay. Higher DTA means it's bad because loan commitments, existing loan commitments are very high. So I've given some benchmarks, rough calculation, but again, these benchmarks may vary from one bank to another bank and their loan book, their risk-taking ability of the bank. Just I'm giving an indicative. Usually, a low DTA below 36%, the loan can be approved. What is the meaning of that? 36% of existing gross salary is going as a EMI already. So if it is less than 36%, I mean, comfortably you can lend. Okay. But so they give an example, a borrower with a DTA of 25%, which is less than 36%, the loan can be approved. Moderate DTA is considered 36% to 43%, little bit doubtful. Maybe we need to consider their family income, or maybe we need to consider their unstable income, like the, a bonus or overtime and stuff like that. Maybe we have to see, including that, whether DTA works out or not. And we have to take a caution call over there. But if the DTA is above 43%, like say 50%, then we are definitely going to reject it, because already loan EMI is 50% of my gross salary. I mean, not even net, 50% of my gross salary. In that remaining 50%, I have to pay taxes, I have to pay, my regular expenses, living expenses, so all these things will go. So that will be a financial strain for the borrower. So this is a rough benchmark I have given. So when you calculate, it's not about how you put the values and this one. So you need to understand what is gross, net, what is given in the sum problem, whether they are given gross or net, whether you have all the information. Accordingly, you need to make a decision on the spot over there. Okay, so 2 days we have time to sit, think, silently you think, understand everything. Don't memorize, it will not work. You will confuse everything. Now, before I go to credit card, I wanted to show you. So I've given a few examples here, but I'll give you some problems. I mean, next quiz is on problems. I'll give you, once you all go through the notes and ready for calculation, then I'll give you problems. Otherwise, now if I give you, it's going to be burden for you. Serviceability. Home loan mortgage, just for knowledge sake, you can go through home loan mortgage. Now, different types of, this is very important, types of employment. So if employee works 38 hours per week, I mean, that comes under the full-time employment. Employment is ongoing with no end date, entitled to paid annual leave, sick leave. So all these things, if it is there, I mean, it's a permanent employment. I mean, you can, I mean, it's a low risk for the bank. You can lend him because it's a permanent employment and he's have a full-time job. But what do you mean by part-time? If your employee works less than 38 hours, the hours are not fixed, ongoing, entitled to leave benefits on a pro rata basis. Okay, the leave, he doesn't have standard leave. It means it will have an impact on his work. He may anytime lose the job, or he may give up the job. So nurse working 24 hours per week. earning AUD 50,000 annually. Banks accept income if hours are consistent and ongoing. If it is not consistent and ongoing, if it is like varying, 1 week she's working only 10 hours, next week she's working 30 hours. Okay, so the income will vary. Or 1 month she's working 38 hours, another month she's working only 24 hours, another month she's working 15 hours. So that is inconsistent. So that will have, she will have a unstable income. Okay, then casual employment, a lot of casual employments are there in Australia. Many students, Indians, when they go to Australia, they go for this kind of like casual, this one, no guaranteed hours, paid a higher hourly rate due to casual loading, extra pay instead of leave benefits. They don't take leave and then work extra time. Income can fluctuate, higher risk due to variability. Banks usually require at least 6 to 12 months of employment history. Try to find out whether the income is consistent or not. If they're not satisfied that he doesn't have a consistent income, stable income, you need to apply caution. The loan application might get rejected. There's a contract fixed term employment also, only for a specific period, 6 months or 12 months, common in IT and project roles. Time remaining to the contract, they see likelihood of renewal, whether the company will renew the contract. So all these things we need to keep in mind. Another important thing, one situation which last time I was asking the students, somebody whose age of 55 in India is applying for a loan. Will you give him loan or not? He is asking for a loan for 6 years repayment. A person who's the age of say 55, 56 is applying for a loan for
Sir, it
6
depends on their retirement age.
years.
So how many more years they would be working, that we have to assess before deciding on whether we
Assuming,
should
say,
be.
for example, retirement age is 58.
So if it is 58 and he is seeking for 6 years of loan, then this might not be possible. But we can give it for 3 years.
Yeah, but still, we will consider his role. Is there a chance that he may lose his job also because he is old age? Right, superannuation is there. But then after his retirement, he will not have his income. Income would stop by the age of 58. So a person who's above 55, you need to apply caution. He may have health issues as well. Superannuation is there. He may have health issues and all his money may go in health. These kind of situations may come, but you need to apply logic and give a proper answer. Okay, so I think some examples I have given here. Weekly pay of 7, paid every, okay, different pays, period. Weekly pay means paid every 7 days once, common in construction, hospitality, retail in Australia. Fortnightly means paid every 14 days, 2 weeks once. Most common pay cycle in Australia is fortnightly. So you should know what fortnightly means. Half of the month, like 14 days a month. Monthly pay is there, paid months in one that you are aware of. Very important, Australian financial year starts from 1st July to 30th June. In India, it is April 1 to March 31. Australia is that one. So there's one important term is called as YTD income, year to date income. YTD income means, from that financial year, which is starting from 1st July till today's date. Say for example, if you have to calculate my salary, say for example, my income is 50,000 rupees and today is February 13th already. If you want, and you know that first of the month you get the salary. So YTD income is, so I have to calculate from 1st of July. It means July you leave, July month ka salary I would have got it in August. So August, September, October, November, December, Jan, Feb, 7 months income I would have got. So 50,000 into 7, 3,50,000 would have been my YTD income. Okay, so questions may come even during that this one. What is that? MCQ. YTD calculations may come. So you should know it is from 1st July you need to calculate. Okay, some examples I had given. So go through it. If you can go through this entire document and you are able to calculate and interpret it, then I'll give you the this one. What is that? Quiz I will give you. Now, any questions?